America owns a pile of gold worth $1 trillion. Its own accountants say it's worth 11 billion. Same gold, same vault, same day, two numbers, almost 100 times apart. And this isn't a mistake. Nobody fat-fingered a spreadsheet. The United States government has decided on purpose to value its greatest treasure at a fraction of what it's worth, and to keep doing it while the national debt climbs into the stratosphere. So, let me answer three things for you. How can the same gold be worth $1 trillion and 11 billion at the same time? Why won't Washington just fix the number? And why does the man guarding it swear it doesn't matter anyway? And this is one of the cleanest examples of accounting fiction you'll ever come across, hiding right out in the open on the books of the richest government on earth. Stick with me, because once you see how this trick works, you can't unsee it. You'll start spotting it on company balance sheets, in the news, everywhere. It started with a TV interview. In July 2026, Treasury Secretary Scott Bessent went on Fox News and, sounding almost bored, said, America's gold is, quote, present and accounted for. The largest pile of gold in the world, over $1 trillion at current market value. He said it to calm people down. The debt was in the headlines, interest costs were exploding, and folks were nervous. $1 trillion in gold sounds reassuring. So let's look at that gold. The U.S. holds about 261 million ounces of it, roughly 8,000 tons, more than any other country on the planet. The most famous chunk sits in Fort Knox, Kentucky, around 147 million ounces behind the vault doors. Now, the strange part. On the government's own books, all that gold is recorded at $42.22 an ounce. Not the market price, $42. Do the math, 261 million ounces times $42, and you get about $11 billion. That's the official value of America's gold. But at today's market price, gold's trading around $4,000 an ounce. So that same hoard is really worth about $1 trillion. Think about that with something you know. Imagine your grandparents bought a house in 1973 for $40,000, and every tax form since has still listed it at $40,000, while the house is really worth $2 million today. On paper, they look almost broke. In reality, they're sitting on a fortune. That's exactly what the U.S. is doing with its gold, except the gap is even wilder. The book price and the real price are almost 100 times apart. The number on the page stopped telling the truth decades ago. So, who picked $42? And why is it still there? To understand that, you have to go back to when gold and the dollar were the same thing. For most of history, your money was a receipt, a dollar was a claim on real metal sitting in a vault. Hand in the paper, get the gold. That was the gold standard. Then in 1971, President Nixon ended it. He closed what they called the gold window. From that day on, the dollar wasn't backed by metal. It was backed by trust, by law, by the strength of the U.S. economy. Economists call it fiat money. Money that's valuable because the government says it is and because everyone agrees to play along. The $42 price is a fossil from that changeover, frozen by Congress in 1973. And this is the key. Once gold stopped backing the dollar, nobody needed that book number to be accurate anymore. So, it was just never updated. 50 years later, it's still sitting there. Which brings us to the thing most people still get wrong. Ask around and half of folks quietly believe their dollars are backed by the gold in Fort Knox. Bessent on live TV just said the quiet part out loud. The gold backs nothing. Your dollar is a promise, not a receipt. So, why keep $1 trillion of metal you admit is just sitting there? Tradition, reputation, a rainy day reserve. It's a security blanket for the financial system, just not the thing holding up your paycheck, and there's a detail that makes the whole thing even stranger. The last time anyone did a full public audit of the gold in Fort Knox was 1974, more than 50 years ago. That's part of why Bessent went on TV to say it's all present and accounted for in the first place, because a small but loud crowd genuinely wonders if it's still down there at all. He gave his word. He also said he had no plans to actually go count it. Now, if you've got a debt problem and a $1 trillion asset you're pricing at 11 billion, you can guess what people started whispering. Just update the number, remark the gold to today's price, and pocket the difference, roughly $1 trillion out of thin air without selling a single bar. And believe it or not, there's a real mechanism for exactly this. Stay with me. It's simpler than it sounds. The Treasury owns the gold. It hands the Federal Reserve paper slips called gold certificates, valued at that old $42 price, and in return, the Fed credits money to the Treasury's account. That's the plumbing. Revalue the gold, and you retire the old certificates and issue fatter ones at the new price. The Fed credits the Treasury the difference, close to $1 trillion fresh dollars. No gold moves, no gold is sold. The money just appears. And this isn't a fringe fantasy. In August 2025, the Federal Reserve itself published a study on countries that have done exactly this. The idea is officially on the table, so that's it, right? Free money, debt solved, not so fast. Here's the catch. And honestly, this is the part that should stick with you. That's not earning money, it's conjuring it. Those hundreds of billions in new dollars don't come from selling anything or producing anything. They're just typed into existence. And when you flood the system with new money that isn't tied to new value, you get inflation. America tried a version of this back in 1934, and it sent the money supply surging. And even if you ignored all that, even in the best case, look at the scale. The national debt is now so enormous that a full $1 trillion of gold covers roughly 1 year of interest payments. 1 year. It's a sugar rush, not a cure. You'd blow your entire golden parachute plugging 12 months of a hole that never closes, which is exactly why the most telling reaction came from Bessent himself. Handed the magic money button, the man sitting on the treasure said, and I'm paraphrasing, "That's not what I had in mind. We're not revaluing." Think about that. The one guy who could press it won't. When the person guarding the $1 trillion treasure tells you it's not the answer, believe him. So this is the real story. The US isn't hiding $1 trillion in a vault, it's hiding it in a footnote. The gap between what something is worth on paper and what it's worth in the real world, that's where the truth lives. On government books, on company books, everywhere. Learn to look for that gap, and you'll understand more about money than most people ever will. If this changed how you see that pile of gold, do yourself a favor and keep going. Watch the next video on screen, because understanding how money really works under the hood is the best investment you'll make all week. And if there's a term I used, fiat, gold certificates, any of it, that you want a full breakdown on, drop it in the comments and I'll turn it into its own video.